All right, guys, we'll go ahead and get started today. I'll just do the lesson in here instead of going to the group lesson studio. So today we're basically just going to talk about some of the rules that we in prop chasers use and kind of abide by when we're trading. We've gone over a lot of them. This is kind of just going to be like a general overview of some of the rules that we use basically every day. So a couple rules that we use every day. We'll just kind of start from the top as far as market open. So the 2 minute rule. We obviously don't trade the first 2 minutes, and I think we've seen example after example as to why that is. So I mean, you could probably pull up just about any stock and see in the first 2 minutes why we didn't trade that. Today, Neo is kind of a good example. If you look at Neo on the 1 minute chart, whether you wanted to long or short this, the first 2 minutes was pretty choppy. So it opened up the first minute basically down to like 9:02, and then the second minute all the way back up to 9:21. So especially if you're trading with size, that's a sizable jump in just 2 minutes. And then just as far as like chop goes, when the market opens, again we have that 2 minute rule, but if you look at Neo on the 5 minute chart as well, look at that first 5 minute candle. So within that first 5 minutes of market open, it was as low as 9:03 and as high as 9:42. So almost a 40-cent jump just in those first few minutes. And a lot of times, if you find a stock, let's say it has a really good pre-market setup or something, as soon as market opens, we would like to buy it because a lot of times you're going to see, so if we're looking at pre-market, is going to run in the first 2 minutes, and oftentimes we're going to miss out on it because we have that 2 minute rule. And we're okay with that because more often than not, we've seen if we do end up trading that, we oftentimes lose on it. So that's just a rule that we have. That first 2 minutes is pretty volatile, whether it's small cap or large cap. So we just sit out that first 2 minutes, let traders get their excitement out of the way. Hopefully, let it chop out and find a direction. And that's why we have that. So we don't trade the first 2 minutes. And then another rule that we have, not necessarily like a hard rule, but something we often go by is trading above or below VWAP. So if a stock is trading under VWAP, which is the purple line, if you have TOS, if you have whatever trading software you use, and you have VWAP, it's the middle one. So if a stock is trading under that, then we typically don't really want to trade it to the upside. If a stock's trading under that, then and it's, let's say it's easy to borrow, then that's a good thing. Let's look at it. Maybe we'll short that. So if it's trading under VWAP and it's easy to borrow, we might look to short that. And then if it's trading above it, that's really what we'd like to see, especially in the small cap, high momentum gappers. So looking for it to be trading above VWAP to long it. And if it's something we want to short, we obviously want to see that below. And middle VWAP is oftentimes going to act as support and resistance. So if it's under it, it's probably going to act as resistance for a little bit. Once it breaks it, it'll flip it, and then vice versa. If it's trading above it and it's coming down, hopefully, VWAP could act as a support there. So that's kind of general rules as trading VWAP above or below. And then another thing we'll often mention is the 200 MA. I still have Neo up on my chart. It's not even close to 200 MA. It's just been trading, under it. Let me flip to something here. Meta is really far under it. So something on my watch list I have is LCID. So if you see that on the 6 month time frame, you'll see that it was trading kind of around it, and it did break above it. It traded above it for a couple days, and then big candle broke below it, traded below it this whole time. You see that big wick a couple days ago, all the way up touching it. So, and then trading again below it. So the 200 MA on the 6 month time frame is something we kind of similar to VWAP. If we are trading something, we really like to see it trading around or above that 200 MA. If it's trading below it, that's usually going to act as a resistance. And if it's trading above it, excuse me, hopefully that's going to act as support. So similar to VWAP, the 200 MA on the 6 month time frame, we look at that in just about every trade. And if it's under it, we need to be cognizant of how far away it is. If it's, only 20, 30 cents away, even if it's, halted up, the upside of that move is probably around, 200 MA, at least for the time being. So just keep that in mind. We really want to see something trading above that. And if it's below it, it's probably going to act as resistance. And then to go along with support and resistance. Obviously, you guys hear a lot about psychological resistance lines. That's another, not necessarily rule, but kind of thing that we go by when we trade. So when we're developing a plan and dissecting a chart, we always keep psychological resistance lines in our minds, and those are usually oftentimes price targets as well as stop losses. So if we enter a stock, at $5, then our price targets are going to be 525 and 550. So that's why it's also important to both average in and average out. So you enter a stock at $5, you have two price targets of 25 and 50. 525, maybe take a third. 550, take half, and then you have a third riding to hopefully a halt, and so on and so on. And then same thing for the opposite way. So you're trading a stock at $5 and your first price target's 525. We obviously want to practice those winning ratios 2-to-1, and so being 525 is your first price target. 2-to-1, cut that in half, then you're looking at 10, 11, 12 cents. So you want to stop out around the mid 480s, and then if you're going to let it ride a little longer, which again, try to keep those winning ratios 2-to-1, you could try to use 475 as the psychological resistance line to the downside, and hopefully it bounces off that and then comes back up to the whole dollar. So keep those psychological resistance lines in your mind when you're trading, again, both up and down. We want to use those as price targets as well as potential stop losses, and using all of these things together, the 2-minute rule, trading above or below VWAP, using the 200 MA, keeping psychological resistance lines in mind, doing all of this stuff together is kind of what makes up our trades. These are the kind of rules we have. These are things we're looking for. These are the reasons why we do and don't do things. So try to keep all this stuff in mind when you're looking at charts, when you're developing a plan, and really try to implement these in every trade. And those aren't, every single rule, but those are basically the ones that we look at and see every day. Does anyone have any questions on any of those rules? And again, a lot of these you can use a lot of these in both small cap and large cap. Obviously, we trade a lot of small cap. We do a lot of the, high momentum stuff. You can flip to just about any stock and see, the rules that we have, the things that we're talking about right now, and kind of see, how it played out. Using VWAP only on lower time frames. So I only trade on the 1 and the 5, and I use it on both, but it's usually basically the same. So like right now I have LCID on my screen, VWAP on the 5-minute and the 1-minute are both 1347. So I just use it on the 1 and the 5. If you're trading on larger time frames, it might not be as important in those very short term increments. Obviously, if something's trading below VWAP or right at it, and you're trading on a 30-minute or 1 hour chart, then you can probably let it move a little bit more. But again, just keep those risk rewards in mind. And if I were to trade large cap stocks, a lot more than we do because we don't really trade them a ton. But if I were to trade large cap stocks, especially, Jason talked about doing some options here and there, I would definitely not be using the 1 and the 5-minute. Technically, if I'm trading, longer term stuff, I'd probably be using bigger time frames, like the 15 and the 30. Comparing it to the 200 SMA on the 6 month. Yeah, the only comparison I kind of put it towards was being that line is support and resistance. So, and it acts the same in our rules as trading above or below it. So if something's under VWAP, we want to trade it, above. If something's under the 200 MA, we'd rather trade it above. So they obviously do different things and are very different time frames, but our rules are basically we want to see it above regardless of the time frame. AMD, again, you can kind of look at the 2-minute rule. So the first 2 minutes of AMD, green, really strong green candle. That first minute, went from 58 almost to 59, and then the next 2 minutes, it dropped all the way from 59.11 to 58.32. So that's a large cap stock that's much more expensive, and it's obviously going to move more. But that's just another example of that 2-minute rule of why, whether you're trying to long or short that, you're probably going to stop out. If you take profits quick enough, you might make a little bit of money. But again, those first 2 minutes are usually pretty choppy regardless of the stock. And then again, AMD, if you look on the 5 minute, we're talking about the 2 minute rule, but if you look at the two, first 5 minute candles, all the way up to 59.10, all the way down to 58.05. So that's a big swing. And again, trading with any amount of size in a stock like that, that's a lot of money, good or bad. So first 2 minutes, again, we sit out, we let the excitement happen. A lot of traders can't even trade pre-market, so they'll come in at 9:30 and just throw stuff at whatever, and hope that it goes well. So first 2 minutes are pretty choppy regardless, and that's why we sit out. VWAP, again, we talk about it all the time. We want to trade it above it rather than below it. Regardless if it's above it or below it, it's probably going to act as either support or resistance. 200 MA, same thing. 6-month time frame is where we look at the 200 MA. It's the blue line if you're using Jason's setup on TOS. Really want to see stocks trading above that. If it's trading below it, it's probably going to act as a resistance. And then keep those psychological resistance lines in your mind in every trade, regardless of whether it's small cap, large cap. Keep those 25-cent intervals, those whole dollars in mind when you're trading, when you're developing your plan. And then, again, go back and look at some charts, whether you traded it or not. Maybe look at it and say, in real time, if I was to trade this, I'd probably do this, or even paper trade it, and then go back and look and see how these rules kind of applied themselves to that trade and that chart. Did anyone have any questions about any of the rules that we kind of use or go by, or any tricky questions at all? Type them in chat. I shouldn't be muted. If you want to unmute your mic, ask a question, or you can DM me. Again, these lessons are more beginner based. We obviously have people coming in here every day, so some of this stuff might seem repetitive, and I'm going to try to obviously space things out as much as possible. Next week we'll be doing a mindset lesson, so if you want to join that, look out for that. We're approaching about halfway point with that, so I'll be doing more of those, and then I think Jason's going to do a couple as well, so good stuff coming with that. Yeah, market's pretty choppy. Makes a move down, makes a move up. Could have definitely made money on that move to the downside early this morning, starting with that second 5-minute candle. That was a good move. I think some data came out around 10. Ever since then, it's, again, choppy, but it's been moving up, so be careful out there. Just keep showing up, keep putting the time in. We're going to keep, showing up and pouring into you guys and doing our best to get you ready for when the market does turn. I'd really like to see a hot market this year. We're kind of running out of time here, but even if we can get a month, you can make more money in a month of a hot market than you made in the last 11 months this year. So just keep showing up. I appreciate you guys coming to the group lessons. I appreciate your time. I know you value it. I do as well. So if you have any questions, feel free to reach out to me, Jason, Noah Dagan, whoever, send us DM. We'll get your questions answered. And then in these group lessons every week with me in particular, on Thursdays, bring all your questions. We'll have a topic that we talk about, but then it's open forum after that. Bring all your questions if you want to learn anything or anything by me, or get the group's opinion. I definitely encourage that. So if you guys don't have any other questions, that is the group lesson for today. Just keep those rules in mind. And again, it'll be interesting. Go back, whether it's in something you traded, something you wanted to trade, something you paper traded, something you're just looking at, and just see on the chart all of these rules that we have. You'll see most of them play out in just about every trade. So there's a reason that we have these in place. There's a reason we do and don't do certain things. We're obviously not perfect. We're obviously going to break rules sometimes, and we're obviously going to lose on trades sometimes. So that's why it's important to average in, average out, keep your winners big, your losers small, and always have those winning ratios. So keep that stuff in mind, and we'll be back at it at 9:30 EST tomorrow morning. I appreciate you guys. You're doing great. I'm proud of you. Have a good day.